Terry wrote, how long is this supposed to last anyway? I have to wash my hair. Terry, your hair is fading. You don't have much to wash. All right. Give about another minute and see if anybody gets in here. Today's webinar, we're going to be talking about how to find a trend with pinpoint accuracy. Some of the things that we're going to be talking about, let me scroll down here. Here we go. How to spot a trend in about 5 seconds or less. Where to get into a trend, where to place your profit, target, and stop loss. How long to hold on to a trade, and a lot size management. Now, how many people in here are trend followers? That means how many take trades that last several days to several weeks? Have you ever done that? If not, it's a little bit different than your basic day trading. Excuse me. It's a little bit different than your basic day trading. We're looking to get in on the major trends of the market. Now, I don't take trend following trades a whole lot. I take them more than I used to. But once you get in on a trend, it's so hard not to take that profit. But I want to show you today, if you let at least some of your profit ride, it may prove a little bit better in the future. So let's get right into it. We're going to be looking today at something called the probability tool suite. This is one of my tools that I use. It's practically the only thing that I use for trend following, for binary options, spreads, the whole gamut. This is what I use. This is where our signals come from. And I'm also going to show you how most of the things taught on the internet about technical indicators are wrong, dead wrong. Okay, so we're going to be looking at this one right here. This is the Euro Yen. If you want to pull up your chart and follow along, if you have the tool suite. If you don't, just follow along here. This is the Euro Yen. What we're trading with is moving averages. We're also going to be looking at the Euro US dollar with the CCI indicator. We're going to be looking at the Australia US dollar with the bar run. And we're going to be looking at the USD CAD with the RSI. I'm going to start with the RSI. Now, the general consensus on a lot of places all over the internet are whenever you have an RSI on a chart, let me draw a little picture here. Whenever you have an RSI on a chart, you've got what's called an overbought line and an oversold line. And then the RSI, it'll move up and it'll move down, move up, move down. And then at some point, it'll move up here above this overbought area, and then it'll move down. Maybe it'll move up again, and then it'll come back down. And it just oscillates back and forth from overbought to oversold. And the general consensus is the overbought area at 70 and the oversold area at 30, that you're supposed to sell it up here and you're supposed to buy it down here. Well, that's just bull crap. I'm going to prove it to you here in just a minute. Hang on, get rid of that. That's bull crap, because whenever you're trend following, whenever price is moving up into what's called an overbought area, that means it's really, really strong. Maybe it's strong for the past 5 minutes or the past day, but it is strong. So right here, what I've got on my screen, I've got the RSI at a setting of 14, 70, and 30. Whenever it crosses into overbought or oversold, it's going to go in that direction. It's not going to sell it in an overbought area. It's going to buy it. So it's going against what everybody teaches out there. So let's just look at it. Let's just hang on just a second. Let me get rid of this. We're going to scroll back in the charts here, and we're going to see what happens whenever you buy, like if price goes into an overbought area. Now look, you see this arrow right here? Price stuck its head up above the overbought area on the RSI. Now when it done that, it did pull back a little bit, but if you will notice, price was strong moving into it. We had 4 days. This is a daily chart. 1, 2, 3, 4. 4 days of strong upward movement. Now in this area right here, this is what's called a consolidation. When price moves up in a dramatic fashion where everybody's buying, they're not going to continue buying unless there's a consolidation or a pullback. That's where a lot of people buy. I'm a little bit different. I will buy going into the highs, or I will sell going down into the lows. That's what I do. This line right here is usually my buy area right here. Now, I chose this area because it's at the very tippy top of the upward movement. Now, this gave a buy signal right here. Consolidation happens, and then whenever it breaks the high again, boom, it's off to the races. Same thing with this signal. Buying at the RSI overbought area, which is right here, and over the next few days, it continues to move on up. And you can see this time and time again. Here's another signal, comes out at the open of the bar, and it continues to move up. It doesn't happen 100% of the time, like on this one. Check this out. Okay, well, there we go. Price dipped down below the oversold area right here on the open of this bar. The signal came out. Now, if we're looking at binaries, this is a losing trade. However, looking at Forex is a little different. You can hang on to trades a lot longer than you can in binaries. So had I sold this right here, yeah, price pulled back in about 191 pips or something like that. 191 pips for like a daily trade, that's suicide. 191 pips for a trend following trade, however, is perfectly normal. People do it all the time. Did price give some profit? It did, but how much? Let's go check it. About 100 pips or so, 99 pips, whatever. And you can look at just about every signal. Buying at the highs and getting in on the trend will prove to be a lot better than selling. For instance, had you sold right here whenever price dipped or rose up to the overbought area, had you sold right here thinking, oh, it's went up too far for like the past 5 days, it's got to make a pullback. Well, it made a little bitty pullback. If you're scalping, that's fine. However, if you're trend following and you want to get in on those big moves, that's not the thing to do. The thing is to buy it, to do exactly opposite of what the internet teaches. Now, that sucker moved up like 1,000 pips from there, and it did here as well. Here, price went down whenever you sold it in the oversold area. Here, price went down. How much did it go down? It went down about right at 90 pips or so. And you see this over and over and over in the markets. So next time that you look at an RSI, well, this is on a daily chart. Next time you look at an RSI, instead of just blindly selling in an overbought area, I want you to think about it. Well, price is moving up. Where's the trend? Where's the overall trend? We can choose the overall trend by looking at a daily chart on just about anything. We're going to do that right now. We're going to forget about this tool suite for a second. We're going to go spot us a trend. Okay. Let's start out with the USD CAD. Okay, just by looking at this, I want everybody, if you want to vote. Is this an uptrend or a downtrend? Can you spot it? Don't worry about what you can make today or anything like that. Just the trend. We're looking at the trend. Uptrend or downtrend? What do you see? I see down, down, down. Yep, it is a downtrend. Now, over the past several days, of course, it's been moving up. But overall, it is a downtrend. Now, look at the USD Swiss franc. This trend, who knows? Neither an uptrend nor a downtrend on the long term. If you can't spot it right off, forget about it. Let's go to the next one, USD yen. That's a downtrend. So we've got USD CAD and USD yen. They're both in downtrends. Euro USD, that's an uptrend. You can spot it. Euro pound, nothing. Euro yen, nothing. Pound yen, nothing. Pound USD, that is an uptrend. You can spot it. Over on the right-hand side of the chart. Hang on. Now, we're not talking about reversals. I think that's you, Terry. We're not talking about reversals right now. We're just talking about where's the trend at. If the trend starts out down here on the left-hand side of your chart, and you look, and it's up here, and it goes up in somewhat of a not a random fashion, but if it doesn't look like Where's it at? If it doesn't look like that, you can't tell anything from this. You're looking for a line to go from here to here, or from here to here. That's what we're looking for. Let's look at Australia US dollar uptrend. So what do I see about all this? If the Australian US dollar is in an uptrend and the Euro US dollar is in an uptrend and the British pound US dollar is also in an uptrend, what does that tell me about the US dollar? What direction is the US dollar going? Can anybody tell me? Correct, down. The US dollar is going down because the British pound against the US dollar is going up. The euro against the US dollar is going up. The Australian US against the US dollar is going up. So if we know that the US dollar is going down in a predictable fashion almost, then you can look at just about anything paired against the US dollar and know that the US dollar is going down. Let's look at USD CAD. USD CAD is going down. Let's look at USD Yen. USD Yen is going down. So let's look at USD Swiss franc again. Now, even though we can't tell anything on this chart, technically it's in a downtrend because price starts up here and it's going down. However, this chart, I'm not going to trade it. I'm just not going to, because it's not in a predictable fashion. We do know that the US dollar is going down. We know that price will probably go down from right around here. How much? I don't know. Nobody can tell you anything about the future. But we know that the US dollar is going down. So basically, whenever you look at a chart, if you know right then that's a downtrend, that's one you want to trade. Look at this one. Downtrend. I mean, since where are we at? Oh, this is on the hourly. For like the past several weeks here, it's in a downtrend. Let's look at the daily. Nothing. We've got a nice downtrend on the daily right here. So basically, when you're looking at a trend, you're looking at, okay, how much money do I want to make? If I want to make 10 pips, I'm not looking at the daily, I'm looking at hourly. If I want to make 100 pips, I'm looking at daily. The larger amount that you want to trade depends on what time frame you're looking at. You can't look at a 1-minute chart and expect to make 100 pips off of it. There's just too much noise. So the more that you want to make or lose, the higher your time frame has to be. Okay, let me get a sip of my coffee. Hang on. Okay, so number one, we learned about whenever you're taking RSI, doing the reverse of what the internet tells you is the proper thing to do. And we know this because I think the statistics are like, I don't know, 90% of traders lose money. Well, probably because everybody is listening to everything that's being touted on the internet. Okay, so we learned that about the RSI. We'll learn how to spot a trend. Now, if we're looking at trends on the daily, we can also look on the weekly. However, I don't look on the weekly too much because I don't hold my trades for, 12 or 15 or 30 weeks. I just don't do it. So I don't look on the weekly. The most that I'll look at for, the main part is the daily. I'm looking at making anywhere between 10 and 100 pips on a trend trade. So let's go to the euro yen here. The euro yen, now this one uses something called a moving average. Has anybody out there used a moving average whenever you're trying to get in on a trade? If you have, yes. If you have not, no. I want to find out who all has used moving averages. Okay, so you know how they work. You know that if, let's say, the 100 is above the 200, then technically it's supposed to be in an uptrend. One guy uses the 233 simple moving average. What time frame do you use that on, by the way? Okay, H4, 4-hour time frame. Okay, if he's using a 233, hang on a second. I'm going to do a little math here. Then that's practically the same thing as a 58 moving average on the daily. Pretty much. I mean, you can get it close. Right here, the ones that I've used are, I'll show you the moving average I've used. 100 over a 200 right there. Just simple as you can be. Now, let's see if this made any money. I'm going to pull up my little chart here, or my little pip count chart. Now you see this arrow right here. From the time that the trade entered here until the time it got out here, it was a negative 82 pips. Not a good thing. Okay, this trade here, from here to here, was a break even. From here to here was 120. This is just a typical trend following. Now watch this. Whenever you get in on a good trend, they can go on for 100 pips, 200, 500 pips, whatever. This one here, I mean, it just freaking lit up and just dropped. Well, it dropped for, if you go all the way down to the tippy bottom, 646 pips. However, you never know that that's the bottom. You just don't. So when do you get out? When an opposing signal comes along, because they're trend following. It's not going to give an opposing signal unless the trend changes. Again, you get in on this one here, which came right around here. That one is 759 pips all the way up to the opposing signal. And we see this time and time and time again in the markets, and people are out here, including myself, trying to get 10 pips, 20 pips, 30 pips, whatever. However, trend following, even though it may be difficult to hold on to, especially when you're in a drawdown of 200 pips or whatever, if you've got the data to back up your signals, more data than this, by the way, I'd probably go back for years and years and years. But if you got the data to back them up, then what's the problem? Because most of your hedge funds out here, they trade simple trend following systems. Usually they can come in at one time a day, 5 p.m. or whatever, look at their charts. If they have a signal, they place a trade. If they don't, they walk away. And that's their job. It's not very difficult. Mechanical trading systems are, that's what they are, mechanical. You look at your signal, which you can come up with them rather easily, especially with the tool suite, because you can see all kinds of data. But you can get in on the trends and just ride them. Now this is a moving average trend following system, 100 over 100 moving average over a 200 moving average. I can't remember the technical name for that, but it is profitable. Now, is it profitable on every single currency pair and every single asset? No. What you need to do, there are a couple of steps when you're coming up with your own system. Step one, put an indicator on there. I don't care what it is. Put an indicator on your chart, whatever it is, and we're going to do this here in a few minutes. Step one, put an indicator on your chart. Find out, does it work or does it not? Step two, if it works, good. If it doesn't, which it probably won't, you can change little bitty steps. Change until you get the results that you want, and then use it. And that's it. Step one, put an indicator on your chart. Step two, change them around until you get the results you want and trade it. You may not be able to get the results you want. If you don't, change the indicator, change the currency pair or the asset or whatever. But making little bitty changes will give you the results you want. All you have to do is look for them. Let me read the comments and see if there's any questions so far. Hang on. Okay, to the guy that said, I'm in drawdown now, about 120 pips, but not worried as USD is going out. What currency pair are you trading? And we will look at that. And while I'm waiting for you to write that, we're going to take a look at a couple more. Euro USD. Okay, this uses the CCI indicator. And where did I find these indicators? Why did I choose these indicators to put on the chart? I just pulled them out of my rear. It doesn't matter. There's no secret magic formula. Okay, CCI. Okay, CCI. Okay, I'll get to your question here in just a second. Okay, if you look at CCI, here's the here are the parameters that I'm using, and you will see these up arrows. Let me make those arrows a little bit bigger. Okay, you see the up arrows here. These are buying. This is on an hourly chart. These are buying when price gets into the overbought area. You don't sell when price is in overbought. When price is going up, you're not looking to sell that. You're waiting to sell until price either, number one, dips down below the overbought to you know, show that price may reverse, and then put your stop above the high or something like that. But you don't sell it when price gets into that overbought area. That's the stupidest thing I ever seen, and I used to do it. I used to do it all the time. So let's go and look back. Signal came out here. How much did price move up? Well, it moved up 73 pips from here. Signal came out right in the middle here. How much did price move up? Well, initially it moved up about 20 pips before it kept going up. Again, signal came out here, price kept going up. Signal came out here, price moved up a little bit, not a whole lot, for, you know, several hours, and then went up. Let's again, here, signal came out, boom, goes up. Now this one here, okay, now again, they don't work all the time. Signal came out here right in the middle, and it went up 33 pips, which is just fine. And then it did a big pullback here. However, did we get an opposing signal? No, we did not. Signal came out here, price pulled way back before it dropped, but there was profit to be made. On this one here, you can see the price came out. It did move up a little bit, moved up 17 pips or whatever, whether you took a profit or not, you know, whatever. But then an opposing signal came out here for a loss of 57 pips. And 57 pips on a trend following strategy is very acceptable in my book, very acceptable. Okay, I'm going to read a comment here. I'm in drawdown now, about 120 pips, but not worried as USD is going down. He's in the USD yen, USD Swiss franc, and they're all going down. Okay, he's using parabolic SAR and 233 SMA, and that's fine. I've got parabolic SAR. Let me pull this table suite over. Blah blah blah. Let me see. Where are we? I got parabolic SAR on here. I'm not gonna mess with it, but you can see that on the daily, everything, just like we said a few minutes ago, it is in a downtrend. It's doing a pullback right here because markets will not move in the same direction over and over and over. They will do pullbacks. So it is in a pullback. The USD Swiss franc is in a big pullback here, and the USD yen, well, it's, you know, it's not doing a major pullback yet, but the US dollar is getting weaker. So let's go to Australia US dollar. Okay, this one is using what's called a bar run. If you don't know what a bar run is, all a bar run is, it's counting the previous bars. We're looking at a daily chart, and what the bar run does, I have it set on, let's see, a 7 bar run, which means 7 days in a row it moves in the same direction. Let's examine that. Okay, so you got 1, 2, 3, 4, 5, 6, 7. 7 blue bars, which means 7 up bars. So it's a very strong uptrend. You know, if price moves up 7 days in a row, a lot of people will be terrified to buy it up there. However, some of your trend followers that have made, I mean, a heck of a lot more than I've ever made, that's what they do. They buy at the tippy top highs. I even wrote an article about this a couple of years ago, buy high and watch it fly. If you Google that on the Google, You'll probably find it. It was with a company called Trading Pub. Anyhow, right here, price went up how much? 60. Wait, let me blow that up a little bit. Price moved up about 60 pips. Now, if prices went up 7 days in a row, and this is on a daily chart, mind you, but if price went up 7 days in a row, and then you got in and it moved up 60 pips, you know, either number one, you can take profit. Number two, you can take some profit, move your stop to break even, whatever you want to do. But we're going to go through here and look at how these react. Okay, so let's see here. And they don't come out very often. I'll look at quality over quantity. Okay, on this one here, price came out at the open of the bar and it moved up 126 pips. How much did it move down? 11 pips. Not a whole lot at all. Here, price came out and it went down. It doesn't look like a whole lot, but it's 65 pips. I'm going to show you the statistics on this in a minute. Right here, price initially moved up about 50 pips, and it kept going up in the amount of 125 pips. This one here, this is getting in on a trend. Now, how many days was this? This was from May until August of 2013. This is a daily chart. If we look at the statistics here, we will see that on the very first day, that this signal came out, how often did price pull back to hit a stop loss area back here, this little yellow area? It didn't do it any. How often did it hit the profit target? 30% of the time. Now, 30% of the time is less than half. It doesn't sound good. But when your stop loss is not getting hit and your profit target's getting hit 30% of the time in the first day, that's pretty good. Now, how often did, let's say we got 4 profit targets or whatever, four areas on the chart that we want to get in. The first area would be right at 20 pips. The second area would be right at 40. Third area would be right at 60, and then 80. So if we're looking to get in on 20 pips, how often does it hit 20 pips in the first day? 84% of the time. How often does it hit stop loss area on the first day? 69% of the time. So you can use these statistics to help you gauge, should I be in this trade or not? Does it have, what happens more often? And how long back are we looking? Are we looking just, for the past couple of days, or are we going back until, 2008? What are we doing here? And you can see when these signals come out, sometimes the trends go on for, 2,500 pips, whatever. That's just ridiculous. Now, how can you get in on a trend like this? Whenever, let's say the first day, it only moves 20 pips or whatever. Well, let's open it up and look at it. Here, we'll look at this one. I gotta find it here. Let me scroll over. Okay, and let me move this out of the way. I'm gonna move that. Okay, now on trades like this, let's say you want to get in on the trade. There's a signal that comes. You want to get in, but you don't want to take a whole lot of stop loss. What you can do, and what I do a lot, is I will take partial profits. Let me write this down for you. Okay, I'll take partial profits and then I will set my stop loss to break even. And what this does is, number one, whenever I take partial profits, I'm locking in that profit. And number two, whenever I move the stop loss to break even and walk away, that means that after I've taken those partial profits, no longer do I have any risk on the table. I have none, because if price comes back to hit my stop at my break even, I lose 0 on that trade. So let's say I trade, let's say I trade one lot. Maybe about 20 pips or so. I'll take whatever, half of it, half the lots off at 20 pips, half the lots at, 40 pips, whatever. And then I'll leave my remaining little, uh, point 20, or what do you call it, too many lots. Maybe I'll leave my remaining too many lots, and then I just walk away for a week, walk away for a month, whatever. And whenever that happens, what you're going to find out is you're going to come back to your computer. Maybe you go on vacation, you leave your trade open, stop loss at 0, whatever. And after, a week, a month, whatever, this thing might be down, 2,500 pips, something like that. It can happen in a few days on a fast moving market, but you have no risk. Your trade's just there, going in a major trend, and you might be up 500 pips, 1,000 pips, 2,500 freaking pips. Hang on, let me read a question here. Could you also use that to enter on a pullback? So if price hits minus 20, 69% of the time, you can enter. Okay, yeah. Pullbacks, we'll talk about that here in just a second. Because pullbacks are fine, you just have to be careful. So, if you enter and you set your stop loss to break even and walk away, what's the harm? You can't get hurt after that. So again, on this one, let's say let's say you get in on the trade and price gets up here however much, you put your stop loss at break even, which is right here, and then over the next few days you're up 200 pips, 300 pips, or whatever. Then over the next few days comes back and it's going to stop you out here before the trend continues. Well, guess what? You didn't lose anything. You were up 300 pips. You may say, well, I just lost 300 pips. No, it was upside. It was upside loss. Whenever your equity curve looks something like this, whenever you're making money and then you lose a little, and you make a little and you lose a little, and you make a little and you lose a little, it's fine, because this is upside losses. It's not like whenever you're making some and then you lose a whole lot and then you're always trying to get back up there, but you can't. It's not like that. It's upside potential. I'm going to show you something on one of the strategies that we trade. The general consensus of trading profits, or the general benchmark, is between, some say 8 and 10% per year. Some say 20 to 30% per year. This is one of our systems that we do. We just use this to keep track of it, and this is what it looks like. Now, it's not a whole lot. It's not a whole lot at all. It's up 45% since inception, which was on September the 12th. So less than a year, and it's up 45%, trading very, very conservatively. Now, if that's the case, and we're using trend following, it must work. So trend following does work. You can get in, but you have to do everything opposite of what everybody on, okay, I'm not going to mention the forums or anything like that, but there are forums out there. There are certain schools out there that teach things that are ass backwards. I mean, they are. When something is an overbought, you do not sell it. I just want to get that in your mind. You do not sell it. Okay, let's talk about the question that Luke came up with on a pullback. Okay. We have something called touch and expire. It's different, and I haven't even written the manual on this yet. It's different from touch and retrace. Touch and expire. It will show you how often price will pull back to an area and then expire up above the middle break-even area. I'm not going to go into it, but basically it will show you whenever price makes a pullback how often it will turn right around and go back up to the area, the original signal area that the signal came out at. Now the signals come out at the open of the bar, the ones that I'm looking at. So how often does it pull back and then turn right around and go up to quote unquote expire at the ATM area, which is at the money within the time frame given? Right now, I'm just looking at 1 day, so this is not good to use for 1 day. However, I do know that 50% of the time, if price pulls back to let me blow this up. I can't see what I'm. If price pulls back to this area, during that day, then 50% of the time it is going to raise and at the end of the day be above this area 50% of the time. Now, if that happens, you can use what's called an OTM binary trade. You can spend a little to try to make a lot, and if it happens 50% of the time, hey, that's pretty good. But how often has that happened? It's only happened two times, so we can't really use that. So this is not a good one. But let's open up our time frame. Right now we're just looking at 1 day. Let's look at, I don't know, 10 days out, and let's see what happens there. Well, I know that 46% of the time, which is still fine, it pulls back to this area and then closes back above there. However, that's not enough room. Luke, are you following me so far? If it pulls back only 20 pips and then closes back above that 46% of the time, it's not enough for me to. So this is, I'm not going to take a trade based on a pullback on that. Number one, if you get in on a pullback, you better know where your support and resistance are. Okay, let's go on to the next one. The CAD. Did we talk about the CAD? I don't know if we talked about the CAD or the, let's see, CAD, we use the RSI, and we use bar run, CCI, and moving averages. Okay, the USD CAD, this is, again, this is RSI. Let's look at a pullback on the RSI. Let's see what happens. Okay, I know that 51% of the time, if price pulls back to this area, which I will show you, okay, 51% of the time, if price pulls back to this yellow line, during the course of the trade, that it is going to close below the where the signal came out at, which would be at the open of the bar, before the expiry, or before it ends right here. So 51% of the time, that's pretty good. That's fine. 50% of the time, if it pulls back here, 57, and 60% of the time. So pullbacks on this one would be fine, because we know that more often than not, when price pulls back, it's going to close, or at least move back down below the original area before expiry. Touch. Oh, okay, the question was, so if we want to create a Forex trend trading strategy, should we look for an expiry or touch? Touch. Expiries are for binaries or for spreads or things like that. But for Forex, you want to look at expiries. You want to look at touches, touch and retrace, or touch and expire. If you're looking for a pullback trade, you want to use touch and expire. If you're looking for just how often, let's say an OTM trade for binaries or whatever, for Forex, you want to use touch. It'll show you how often price touches. Let's look at touch. Okay, right here I know the price is going to touch how many pips away? About 40 pips away in 77% of the time. 77% of the time, it's going to give you 40 pips within how many days? Within 3 days. 3 days, 40 pips, 77% of the time. Now I can expand that. I can look, well, what if I want to look at, you know, I don't know, 100 pips or whatever. Well, you got to divide it by 4. So 100 divided by 4 would be 25. We're going to look at the expiries, and then we're going to open up this. We're going to say, if I'm looking for 100 pips, I need to look out more than 3 days. Let's look out, you know, 10 days and see what the probabilities are, and we'll see, is this a good system or not? Well, I know that within this time frame, within 10 days, I know that price will hit 100 pips 63% of the time. I can also see that it's done it 7 times in a row, and I can also see that it has lost or it has not touched the profit target or the OTM level 36% of the time, and it's not done that 3 times in a row. Like here's one that it did not touch the last level. It only went down and touched the 3rd level here, which it does that 77% of the time. It has won 9 times in a row, and it has lost or not touched it 2 times in a row. So whenever we're looking for Forex, we want to use touch only. I'm gonna get a sip of my coffee. Hang on. Okay, so let's see if we can come up with a strategy right now. We're going to just start with a blank chart, and we're going to come up with a trend following strategy from scratch just by looking at everything. So what I'm going to do, I am going to get out of all this. Hang on. Telemarketer probably. I just hung up on them. We're going to get out of all this, and we're going to open up a blank new chart. Now, I want somebody to tell me, what do we want to look at? What asset, what currency pair, the ones that I have listed here, these are nadex pairs. We can trade anything, whatever you want to trade. I'll pull it up. But what's one asset that we want to look at? Oh, before we do that, I have a question. We'll do pound yen or pound USD. Before we do that, I do have a question. A few minutes ago, why did I adjust to 25 instead of 100? Because, let me, I will show you. Okay, right here. Right here, the signal comes out. You can't see it because it's on a touch mode, but you can see exactly where the signal comes out if I put it on expiry. Let me just do that for a second. Okay, you see this middle line here. This is where the signal comes out right here. So if I'm looking at a profit target all the way to the end, that's 40 pips. Okay, so if it's 40 pips, let me see, hang on. Right here, I have to put in 10 because 10 times 4 is 40. And if I'm counting from here to here, that's 10 pips, 10 pips, 10 pips, and 10 pips, which adds up to 40. However, if I'm looking at 100 pips, I have to put in 25 because each one of these is 25 pip intervals. 25, 25, 25, and 25, and all that equals 100. Do you understand? That's why I did that. Okay, so we're going to look at, well, we got British pound being the first one up here. We'll look at that. So we're going to look at British pound. Now, what time frame do we want to look at? 1 hour, 4 hour, daily? Which one? We can look at shorter time frames, but on trend following, it's kind of, you might not want to do that. 4 hour. All right, we'll look at 4 hour here. Okay, we got a 4 hour pound yen, or crap. I don't know why pound yen is on my mind. Pound USD. Okay, now let's look at touch mode. That's the first thing we got to do. We got to turn it on touch mode because if we're trading Forex, we don't want expiries. That makes no sense whatsoever. So we're going to put it on touch mode, trading a 4 hour. We'll leave it at 25 just to see what we can do. And we're just going to leave it on what it's set at right now, which is moving averages. And the moving average is set to 100 and 200 simple moving average. You can change it to other stuff, but I'm not going to. I'm just going to leave it on simple. It's all the same anyhow. Okay, now what can I see right now? I can see that it only gives me 10 trades on these settings, but I'm not even going to look at this data box right now. The first thing I'm going to do, I'm going to go look. I'm going to go look here, and I'm going to see, okay, what's going on just the settings that I have. Is there profit potential or no? I see that there is profit potential because on every single one of these trades there is profit. From here, price moved up. From here, price moved down. From here, price moved up a little bit. From here, price moved down. From here, price moved up, and so forth. Then I'm going to go in here and I'm going to look. Okay, what is more? What is more? The yellow, just imagine a yellow being a stop loss. Imagine the red being a take profit, 100 pips each, 1-to-1 ratio. Which is more? Is this more or is this more? If this is more, then I'm better on my way to having a good system. But however, if it only touches a profit target 30%, but it touches stop loss 60%, that's no good. So what we're looking at is for the profit target to be higher than the stop loss. That's what we're looking at. Now, one thing you can't tell is which one touches first. You'll have to visualize that by looking at your charts. But one thing that I do not like that it only has 10 trades. I'm going to rewind it here and see if it actually has more trades. Yeah, it does. Let me reset my chart here. Okay, so now I can see 16 trades, but that's still, it's okay. But I want to go in here and I want to look at it, and I want to scrutinize everything. Sorry, guys, but if you're a trader, you have to put in a lot of back testing work. You can't just follow something blindly forever. Okay, so on this one here, it gave 100 pips. 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 On this one here, it did not. So how much did we lose? So let's count these up. You got 100, 100, 200, 300, 400. So we got 400 pips so far on the first 4 signals. So we're up 400 pips on the first 4 signals. On this one, how much did we lose? If we're holding until an opposing signal, that would be here. So that would be 400 pips. So we're right back down to break even. On this one, it gave 100. On this one, it gave 100. So there's 200 more pips. On this one, it gave 100. There's 300, 400, 500, 600, 700, 800, 900, 1,000, and 1,100. So now we're up 1,100, which is a 1,100 overall because these two cancel each other out. So right now I have a system that in historical the historical past produced 1,100 pips over historical. Now, will it do that in the future? Who knows? We don't know. We just don't. But how can I make this better? I'm going to look at going here and just testing a few different theories to see if it is any better or not. The way that I do this is go in here and I'm just looking at different parameters. Let's try just a 2200 crossover. Let's see what that produces. That's no good, and I can tell you right that without even looking at the chart, because this is lower than this. So a 2200 is no good. I'm still going to go here and look. Well, it might be good. Might just take a little while. The only thing is, it's going to do a pullback, and you know this. You can look at this and this area right here, which could be used as a stop loss or whatever, or the opposing signal could, but they do pull back. So if I know it pulls back, I want to see what a touch and expire would be. So I know 40% of the time when it pulls back, it's going to be, I know 40% of the time, if it pulls back to this area here, I know that before the end of this period, it is going to be above the at the money or the middle. Let me visualize it for you. I know that if price pulls back to this area before this time runs out right here, price is going to be above where the signal came out, which is right here. And it's going to do that 40% of the time. This may be something to even have a look at. So we'll take a look at another one, and we got about 10 minutes left. So we'll take a look at another. You know what? I don't even know how. I did this webinar for 2 people, and I'm not sure how to pronounce your name. I'll call you Sivaram. Sivaram. I don't know if that's proper or not. Please forgive me if it's not. Chris. Okay, I'll call you Chris. Okay, Chris. That's one way that I look at the tool suite for Forex. But you can go in here and look at the tool suite for, I mean, Lord, anything, any asset. I trade Dow Jones a lot, and the S&P. I want to show you something that happened today. Let's see here. Where's my hourly? There we go, hourly. Let's look at the S&P, because this is one we actually got a signal for last night. I'm going to go ahead and show you the signal. Let me find it. Okay, last night, we got this signal here at 2203 last night. So on the chart, let's look at 2203. Hang on. What is today? Today's the 27th. I'm looking at this little, what's called my local time generator up here, and I'm hovering over and going back to 2020, what is it? 2200 last night. I'm going to draw a line there. That's where the signal came out. Now, where's the ATM line? ATM line 2476.5. 2476.5. Okay, there was my signal right there. Now let's zoom in. Now, so far price has been in an uptrend. However, I got a signal last night to sell this. You can see it right here. Sell the S&P by 3 p.m. today. So 3 p.m. today would be like, where are we at? Oh, it's almost 3 p.m. right now. Gosh, I'm a stoopy stoop. Okay. And price fell down here. Now, the signals that come out, I know, have a better than 50% probability of expiring in the money. These are binaries. However, the same thing goes for Forex trades. I've actually been thinking about using the tool suite to push out some Forex trades as well. I just haven't done that yet. So any signals that I use, 90% of them use the tool suite, or I would say about 75% use the tool suite, and the other 25% use something else. But this can be used for binaries, for Forex, and just about everything. So Luke wants me to do that. Okay, I have another question here. How do you set using, you know what, I'm going to pull this over here. I don't know if you can see this. Can you see this little box on your screen here? It's a little, I don't know if you can see it or not, but let's see. How do you set using expiries? Example, 25 bars from entry or X bars from entry. Does it make a difference? Okay, yes. Let's get all this junk off my screen. Okay, let's just look at an expiry. Okay, I want you to look at this area right here. You see this right here? Now, this is set right now to 75, which means on an hourly chart, that is 75 hours from now. So I know that within 75 hours, this, will happen. If I set this to 1, which is what our binary trades are set on, I know that in 1 hour, this will happen, or has a probability of happening. You can't see them because it's so small here. But if I, changing the expiries will always change the probabilities. If I wanted to set it for 25 hours, I can do that. And I know that within 25 hours, this will happen. If I want to see a different set of parameters, all I have to do is go in here and look right here at either expiry, touch and retrace, or touch and expire. Other than touch and expire, the other three it'll talk about that in your manual. Oh, and by the way, Chris, whenever I get off here, I'm gonna try to update the manual a little bit for Forex because it speaks a lot about binaries. So I'm gonna try to update it for Forex as well. Touch and retrace. Okay, touch and retrace is, let me open it up here. I'll show you what all 4 of them mean. Let me open these up where you can see them a little bit better. I'll put it on 100. Okay. We're going to talk about let me get this over here. Give me just a second here. We're going to talk about touch. Touching. We're going to talk about these 4. Touch. Okay. On a touch, we know that price is going to come out at the open of the bar. The open of the bar. Right here, wherever the arrow is, price is going to come out at the open of the bar on the first second of the open of whatever it is that you're looking at, whatever time frame. Right now we're looking at hourly, so it's on the open of the bar. A touch means how often does it touch this area right there? How often does it touch this area? And so forth. These are for, this is for profit. The ones for loss, how often does it touch a stop loss or an area that moves against you? What it does, it's color coded. So you can see it and you can change these colors as you go along. This is a touch. And does it that often? That's a touch. An expiry is, and for a touch, price can do this, just like it did. It went up, it touched, and then it came back down. It just touched. That's all it is. We're looking at touches only, okay? Now, an expiry is how long it stays above an area up on this part of the chart right here, which is expiry. How many hours out, how many days out? This is the cutoff time. This is for binaries. So does it go up here and stay above here, or does it not? And you can see that whenever you do that as well. This would be a loss for an expiry. This trade right here, because it moved up, but it did not expire above any of these. It fell and it dropped below here. So for a touch, it is a winning trade. For an expiry, it is a losing trade. Do you follow me so far? For a touch and retrace, okay, we'll talk about touch and expire. We'll talk about touch and retrace at the after. Okay, for a touch and retrace, price will open at the open of the bar, and it may come down here, touch it, and then retrace to close above that area. So if price dropped down to here, it would touch this and then close above this area. It's for ATM trades. For touch and expire, it shows how often price comes and touches one of these levels and then closes above the ATM. So a touch and expire means it closes above the ATM. How often does it do that? Let's look at one. We'll look at touch and retrace. Touch and retrace means how often does it, let's look at the 41% here. 41% of the time, I know that if price comes down here to touch this line, it is going to close above this line. So if it does it 41% of the time, then that means 58% of the time it closes below. So do I want to be buying there? No, I don't. Because more often than not, it's going to close below it than it closes above it. However, let's look at this, 70%. 70% of the time, I know that if price comes up here to touch this area, it's going to close below there, by expiry. 70% of the time. Is that a good area to get in for, let's say, an ATM trade? Yes, very good. 70% ATM trade is very good. So that is a touch and retrace. Now, touch and expire. A touch and expire means that, let's say, it pulls down here. How often, if it touches this area, does it close all the way back up above here where the ATM signal came out, which is right in the middle here? I'll even draw a line. It's at the open of the bar that the signal came on. How often if it touches here, does it close all the way back up here? Well, it does it 29% of the time. Okay, so how often, if it touches just this level, does it close back up here? 33% of the time. Still not good. I wouldn't take an OTM trade on that. I would take an OTM trade on this because the price comes all the way down here and it closes back above here 29% of the time, and I'm only risking $5 or $10. Well, for this bar out, I can't risk that much, but that's what that is for. Do you understand? Okay. Okay, I have another question. Rich said, when you refer to binaries, are you talking about straight binaries or nadex or both? I will tell you this, and I'm very, very serious about this. When I refer to binaries or binary options or digital options, I am only talking about nadex, cantor, exchange. There are no, and repeat, there are no other binary options brokers out there, wherever, that are real. None of them. I just got a story yesterday. A person deposited 20 grand into one of those offshore bucket shop brokers, and they just about didn't get the money back. I've heard, there's a client of mine, we talk quite often, he did 30 grand and he never got his back. They're fake. Anybody other than nadex or cantor exchange, sorry, they're fake. You might have something like on maybe one contract on a CBOE or something like that. Maybe some people do get their money back from these offshore bucket shops. Whatever, there's exceptions to the rule there. However, in my opinion, they're all fake. I'm not trading them. It's not real. They manipulate the market. I've done, Lord, I don't know, 10 videos on this showing facts. They manipulate the market. They won't give you their money. God forbid you take their bonus, because you'll never get your money. They require that you trade, I don't know, 40 times your deposit or something before you can make your first withdrawal. It's stupid. So nadex, cantor exchange, and if there's ever a new one, it's going to be listed here. If there's another binary options exchange, it will be listed on the CFTC website, or it might be listed on doubtful, but it might be listed with the NFA. So these are the two U.S. regulating bodies. Okay, Europe has, okay, if you do live in Europe, now my disclaimer is this: I do not trade with these guys. However, IG.com, I'm a US person. IG.com owns Nadex, and they are the closest thing to Nadex. And that's the only overseas binary options broker, whatever, that I'll even talk about, because they own Nadex. Whether or not they do shenanigans, I don't know. But I live in the US, so I trade with these guys. But do your own due diligence. I can't tell you whether these guys are good or not, but I do know that they own Nadex. So if you live in Europe, there's an option for you. But do not, for gosh, whatever you do not trade with, like, I don't know, a company called something like 25 option, or what is it? QI option. You see what I'm doing there? Don't trade with these companies because they're not real. There's even one, something called 100% winning option. Don't, stupid crap. Come on. That's not real. It's not real. It's not real. And it gets my blood boiling because these people are ripping people off all the time. That's all I'll say about that. Okay. Sorry there, Johnny. But that just really, really gets to me. Yeah. Whoever said that in the chat on YouTube, yep, that's who I'm talking about. But, you know, whatever. Nobody has a 99% win rate. You might have a 99% win rate for a week or maybe even a month or whatever, but you're not going to continue that. It's not possible. Anyhow, okay, I am done. If you have any questions, as always, I will leave this thing playing while I go refresh my cup of coffee. If you have questions, I will answer them when I get back. And if not, hey, you guys have a good day. Thank you for being in here. If you're interested in the tool suite, you can pick it up here. I'll show you where it's at. I don't do a whole lot of advertising, but somebody told me to do this. So go here to traderbotmarketplace.com. And if you want to get started, you can click the Get Started tab. If you want to see what pricing is like, you can click there, read the blog, whatever. But you can get it here at TraderBot Marketplace. So because that's all we use.